Why do Asia's agribusinesses and farmers find it difficult to raise capital? I mean, this is despite the positive projections of global growth and projected food gap. Help us understand this disconnect.
I believe there's a long-form answer available. It would come down to really three things: scale, corporate governance, and the risk appetite of investors on why this sector is undercapitalized. And let's start with scale. Historically, most Asian agribusinesses are quite small. That's due through government intervention and land reform. That's through a region that has, in some cases, only emerged from strife, a region that has historically been impoverished. So for many investors, the size of the farms here are just too small. I think secondly, in the world where governance is the most important thing, particularly in regulated markets like the US, Singapore, and Europe, that management and operations expertise is what large international investors are looking for. Without that, it makes it very difficult to pitch an Asian agribusiness to a credit committee or an investment committee. And in a world where there's many opportunities, it's safer to invest in North America than it is in Southeast Asia. And I think the last one would be the risk appetite. Every global investor has a lot of choices. And unfortunately, as farmers well know, agriculture is a challenging business. Weather, government regulation, environmental regulations, and just the difficulty of putting something into the ground and hoping something comes out that's profitable. It is a challenging business. So many global investors do not have the appetite to invest in this sector. It can be a challenge, it can be way too difficult, and the desire and the willingness to learn about the sector and become passionate about it, as we are, is generally not there for many large institutions.
Based on your experience, before we go out and meet an international investor, what type of firms, what type of farms, what type of agribusinesses should consider themselves ready at the size level in terms of ticket size, in terms of meeting international investors? It's not for everyone, but so what firms you think would be the right appetite for?
In terms of size, you'd want to have a minimum of $5 million in US dollar EBITDA. 10 million starts to get a lot more attractive. This allows for large institutions to more effectively deploy their resources. From their perspective, no matter the size, they have to spend a significant amount of capital to see if you are investor ready. So for most institutions, a minimum of 20 million US dollars would be the minimum for them to be attractive. Anything beyond that starts to get too small, would be more suited towards local banks.